Whoops. Look at this. I got everything screwed up today, as per usual. Whoops. Oh my goodness. Look at this. I got it. You can tell I do it myself. Let me just turn off interview mode. Give me 1 second, unless you want to see two of me, which could actually be fun. Maybe I should try that one day. But this needs to go. Boom. And this needs to go. All right, we are in business. Thank you all for being here. I think I've got audio. So today is a good day from some perspectives and a bad day from others. It is tax day in the United States. Some people feel it's the most hated day, like me. Don't like taxes, don't like filing taxes, don't like paying taxes. But who does? But I do pay my fair share. In fact, I've paid more in taxes over the last 10 years than Donald Trump. That's interesting. But it's also the most hated rally, and people were excited yesterday because Bitcoin fell and then it rose again. So we'll talk about some stuff. Some people believe maybe a 45K Bitcoin is possible by the 20th of May, 2023. We're going to examine that carefully and see what we come up with. We're going to talk about Ethereum's return and how that also arose from the dead and came back. We're going to talk about some new trusts, a piece from Mark Yusko, which is really cool, and a whole bunch more. So let's go. Thank you all for being here. Edutainment, as you know. And I noticed that whenever I mention this, people subscribe. If I don't mention it, nobody subscribes. But literally, if you are serious about investing, we pump so much information out. We summarize it all. There's no way a human can possibly keep up, but we're offering a special $45 for an entire year. I subscribe to at least 18 Substacks. The average price is between $100 and $150. This one's only $45, and it doesn't come out weekly. It comes out daily. So think about that. So jump in there. If you want to spend 5 minutes to grab everything, you will have copies of the slides. You can get podcasts and all that good stuff too. And all proceeds go to my writers. So nothing to do with me. You're helping others. Let's talk about a question from last week. This was the lesson du jour last week, and it confused so many people. So I thought I'd revisit it. I said, if an asset is down 90% and you're waiting for the further 50% drop, you'll only end up saving 5% if it returns to its all-time high. That confused so many people. So I'm going to spell it out one more time because this is important before we jump into all the good stuff. So let V be value, the original asset value, say it was $100. So let's say your asset was at $100. It fell by 90%, which is very common amongst many cryptos. That means that the asset is now only worth $10 after the 90% fall. Now you're waiting for the asset to drop a further 50% before buying, and so many were trying to do this with certain names that you know. They weren't happy with the 90% down, so the $100 goes to $10, but they wanted to buy at $5. And my point was, if you wait for that $5 amount and the asset returns back to its original value of 100, you're only saving 5% because you would have bought at 5 instead of 10, but now the asset's worth 100 again. So in other words, you were able to buy the asset at a lower price when the overall gain when the asset returns to its original value is not as significant as you may have thought. So it's one of those things that, Zeno, thank you so much, confused so many people. I just wanted to clarify that. It's a very, very important lesson. And sometimes people get so much PTSD from what happened in the bear market that they just want to wait and wait and wait before jumping in. And that's why we always emphasize layering in, layering out. And that way you at least have your foot on the ladder or off the ladder, as the case may be. So we're going to start with the good news today, and we'll jump right in. So first of all, let's look at the market divided by Bitcoin over the last 7 days. And you can see here, obviously Bitcoin divided by Bitcoin is flat always. But Ethereum returned up 7.17%. Solana, dark green, Avalanche, ICP, etc. In fact, if you look at the items that really beat, the dark green items that really beat Bitcoin over the last week, it was Solana, Avalanche, ICP, Chainlink, Render, Arbitrum, XRD, and Injective Protocol. So they were some names that were really hot, and some of them were super, super, super hot. So let's look at the returns as to what actually happened in terms of dollars. You can see Bitcoin, after a very, very violent swing down, it swung right back up. And Ethereum is hanging close to that 2100 mark. And again, the rest you can see Binance, etc., after all the FUD, is recovering nicely. And that is the world we live in. Let's talk about the top 3 over the last 7 days real quick. And again, this is a point of time. Things fluctuate. This is from K33 Research. And Bitcoin is 1% up for the week, actually a little bit higher now. So again, point in time is just north of 30,000 right now as we speak. Binance up 7% and ETH 10%. And this is what we discussed yesterday on DCA, is how the money rotates across different assets. And if you are a swing trader or a scalper, it's very important to know where the bees are going to go. Let's talk about kind of where we are with the Bitcoin cycle, because I covered this last week and asked if you guys wanted me to dig into it a little bit further. And here it is. In fact, I was helped as well by K33. So these are where we are today from the cycle bottoms 2013, 2017, and 2021. And this is coming down from the peak. If you imagine the top left-hand corner of this chart here, going back in time over the 3 separate epochs, you will see how much it's fallen, how fast it's fallen, and how quickly it's recovered. But if you look at where I put the little red line pointing to where we are today, the 2021 peak was 69K. We had the bear market, nasty bear market in 2022, which ended in November 2022. Since then, it's been rocket ship up. And if you look at that recovery, it is insane. But the reason this is important to look at is for some subsequent charts too. So let's talk about one thing first, a little bit of on-chain stuff. And what I do want to try and emphasize from this great chart from the team at Glassnode is how the difference is between long-term and short-term holders. So the red are the short-term holders, and they tend to jump in hard. Imagine the higher they go up on this curve, the more Bitcoin they accumulate. But they're always late to the party. That's the bad thing. Then you've got the long-term holders, which have much higher conviction, that just keep stacking, and the long-term supply is near an all-time high of 14.161 million Bitcoin. The short-term holder supply is about 2.9 million Bitcoin, and short-term is considered 155 days or less. But what's really interesting is how the long-term holders are much better at timing markets than the short-term holders. And this basically is interesting. Actually, let's show one other thing here. You can see the FTX collapse when that happened. What did the long-term holders do? They increased. Short-term holders said, I can't take this anymore, and they get out of the market. So sadly, sometimes the people that come late to the party have the least amount of conviction. They buy at the tops and sell at the bottoms. You don't want to be one of those people here. And that's kind of what this is interpreting here to some extent as well. But look at, again, the other thing that this supports is how much is actually been held long term, and how scarce this will actually be over time is stunning. So let's go back. Let's talk about where we are on this cycle. And again, I called it the most hated rally back in a video back in November. And it is exactly that. And we have a whole bunch of new entrants as well that have come in. And some of the existing people who play in crypto are still waiting on the sidelines. And you can see this early 2023 rally has all the earmarks of exactly that. But look at where we are in terms of recovery compared to the 2018 cycle. It's recovered faster and stronger in less days, which is also very, very interesting. And why do we care about this? Well, if history repeats, ladies and gentlemen, not promising anything here, but if history repeats, this is what could happen. This is the title of the video. So if we get to this peak, if this chart, the black line, coincides with what the blue line did in the 2018 cycle, remember, things are different. There are way more participants in the market. There is way less supply available, way more being held by long-term holders, etc. And you got big money coming in. You got treasuries coming in for the first time. You got, Bank of America and Canada National Bank and all these different types of players. Now, not selling hopium here, but if this pattern repeats, and we get this level, I added a little red arrow to point at this level, that means that by May 20th, or about a month from now, we could be at 45,000. Again, after that, there's a bit of a breather, bit of sideways movement, bit of consolidation, but we'll see. But right now, I think the long-term holders are far more committed than 4 years ago, and they are still unwilling to sell at the 60% drawdown that we had. And again, this will be interesting to watch. So who knows? As we've seen, the crises in the banking system has actually fueled Bitcoin, as well as the regulatory choke point. It's fueled Bitcoin. If that continues, who knows? Another bank crisis. This could send us up faster. So let's look at another chart here. This is from Will Clemente. And remember, we get to start. I put a big arrow on the left so you can read this. And sometimes seeing all these charts so fast can be confusing. That's why it's good to recap everything for 0.008 cents per day or whatever it is. I can't remember the exact number for the newsletter that comes out. But from Will Clemente, we start at the bottom left. This is when the halving takes place. All right. We are about a year from being where that green arrow is. And look at the green line at the bottom. That is where we are in this cycle before we get to the end. And what typically happens from this point? Things go up. So the next year will be super interesting to watch. And we have a long way to go. But odds are people will catch on. People will try front run the halving, I believe, because, if you go back to 2017, people weren't sure exactly what was going on, how high the market would go and how it would crash down again. And then when it came to the halving of 2020, I think it was May 2020, a lot of people were like, only the hardcore people in the space actually knew what it meant and jumped in headlong. But now the world is so much more educated over the last 4 years. I believe a lot of people will front run this halving, and I do expect that green line at the bottom to go high real fast. Let's talk about Ethereum. The Shapella Rally, believe it or not, there was a rally. It turned out to be an event fueled by a buy the news event, as opposite to many people's expectations, where the market yet again over-exaggerated the impact of a known event. People thought it would just dump and go mad. And I was actually considering moving some of my ETH into another asset. I did not do that, and I'm grateful. Shanghai launched again last Wednesday and was followed by that sharp rally in ETH you can see here. What's important about this too is we got above that 0.07 level of ETH Bitcoin that we look at a lot, and it was down low down about just over 0.05 not too long ago as Bitcoin rallied. But there's a huge amount of motivation now and no selling pressure. A lot of people are staking. Some are still withdrawing, but the price of Ethereum did thrive. And that was a very good thing to see. In addition, despite 1 million ETH being withdrawn from staking, the withdrawn volume has been substantial in the first week. And it doesn't mean that it's being sold. They're pulling it off, but they're not selling it and trading it for something else. And this is probably what people got wrong in their calculus, thinking, well, everybody's going to pull 1 million out. Well, they did that, but they didn't ditch it. Hence, no selling pressure. In addition, if we look at more Ethereum waiting for withdrawal, we don't know what's going to happen with this, but this is from Joe C on Twitter. And he says 899,803, let's call it 900,000 staked ETH, are still waiting to be unstaked. And that's about 5% of the ETH 2.0 validators. And the breakdown here, if you add them up, 80% is going to come from 3 players. That is Kraken in that big purple piece, then Binance 21.2%, and Coinbase 13.2%. They are the big players. What these people do afterwards remains to be seen, but so far, so good. We'll watch this carefully. Let's look at daily active users too, because there was a huge spike in Ethereum activity as well last week, and that's kind of cooled down a little bit, where we had the daily active users for Ethereum at around 450,000 because of all of this unstaking stuff happening. But now you have Polygon back up again over ETH once again. Polygon hitting 332,000 daily active users. Ethereum 306, Solana 274.8, Avalanche 74.8. That's interesting. They're both exactly 74.8. Cardano 49.4, Near 41.9, and Aptos 21.6. So stunning movements here. and I expect a lot of action to happen for one of these names starting real soon. So let's look at some money flows right now. This is a big bump in product inflows, totaling about 114 million last week, which is seeing the continued improving sentiment for this asset class year to date. And this is 4 weeks now of inflows. Even the one 3 weeks ago was tiny, it was still positive, therefore it still counts. And I think the total amount is about $350 million into digital assets in 4 weeks, which is big. Let's look at the detail by asset. So despite the successful launch of Ethereum's yield futures, i.e. Shapella, only 300,000 of inflows were seen last week for Ethereum. Kind of stunning. A lot into Bitcoin, 104,000 or 104 million, getting all confused. Not 104,000, 104 million for Bitcoin, 300,000 for Ethereum only. Short Bitcoin fund was up a bit as well as people kind of protect themselves. Solana had a negative outflow of 2.1 and some others, including Matic, had an outflow as well. And the rest is kind of more or less flat. So again, the big money still all flowing into the 800-pound gorilla, but this week that'll change. Now, first of all, Grayscale launched a new product called their Grayscale Solana Trust, and they have a number of different trusts for a whole bunch of different products. Reading this little tweet here, it began trading under OTC markets. You still don't see it under Yahoo Finance yet, but the ticker is GSOL, and it is over the counter. Okay, and also apparently it's not regulated by the SEC in a piece that I read. So we'll see if that changes real soon. And again, this is designed to provide investors with exposure to Solana, the native token of the Solana blockchain. So that should drive maybe some more money if people trust Grayscale. In other Solana news, Helium is moving to Solana today, and this is why I believe the daily active users and the transactions should start to go up very significantly. They should already have begun UTC, quite a while ago. So it'll be interesting to track what's happening there too. In decoupling news, the correlation between Nasdaq and tech stocks, Nasdaq and Bitcoin, Nasdaq being tech stocks, over the last 90 days, Bitcoin is up 33.4% and Nasdaq is up 14.7%. It's catching. There was a time not too long ago that was 80% up Bitcoin and 0 on the Nasdaq. So it just changes. But remember, this is a rolling 90-day period. So it does change every week, but important to track. And Bitcoin season is still on, but we moved up from 14 last week to 16 this week. So still very, very positive. Bitcoin is still outperforming the majority of altcoins right now. Let's look at the stock market real quick. This was a very mixed week. Kind of some tech was up, some tech was down. All Chinese stocks were down. Banks recovered, which is kind of good to see for the economy. And everything else is kind of all over the place. Energy was kind of more or less positive. But again, a messy week. Some of the big names that we look at heavily, like NVIDIA, big move today. Got into a little special position. Amazon was up, Apple was up, Microsoft was up, Meta was up. But Google and Tesla were down, even after the initial hubbub of them really jumping headlong into the IA business as we go forward. And now everybody's trying to build their own IA chips. There's rumors today that Microsoft's trying to build their own IA chips. So whenever you mention something, say, hey, my name is IA and I'm going to build an AI chip, or I'm AI, or I'm going to build an IA, whatever, it'll pump the stock, and that's what people are jumping on. So you'll see a lot of fluctuations here for all the players. But if everybody starts building AI chips, that could impact NVIDIA down the line. Google's building one. Now Microsoft is building one too. Apple, I'm sure, are building one as well. Let's look at options. These guys have been so on the money for projecting exactly where Bitcoin price is going to go year to date. Stunning. I'm now looking at May 26th, 2023. And this is on Deribit, where most of the option action happens. Put call ratio is 0.28. It's up from 0.26 last week. So slightly more bearish, but the max pain has gone from 24K up to 27K. Very, very good. So that means that's the price point at which people stand to lose the most money. And the bullish action for Bitcoin is still extremely positive. A lot of people taking bets, 38K, 40K, 42K, 48K, and so on. A lot of people have some kind of protective positions, but right now all the stuff sub 20K Bitcoin has kind of almost gone away. So it's very, very positive out there. Let's see how Ethereum compares as we go forward. Thank you, MT. The ETH Deribit option action again, May 26th. So you can see the max pain price has also increased. That was 1,600 last week. Now it's 1,800. And again, there's some big bets up around 2,400, 2,700, and a little bit of 3,000 plus. So the question is, could we get to 2,400 or 2,700 by May 26th, approximately 5 weeks from now? A lot of people are making big bets on that. And so far this year, the people making these bets have been really, really good, 60 to 80% of the time. So that's why we watch it. Let's look at the RHODL, a little bit more on-chain stuff, which is kind of interesting. This is the Bitcoin realized HODL ratio. And the RHODL ratio indicates that the hodlers have reached a peak saturation point and the cycle has likely turned in favor of the bulls. So if you look at the kind of bottom piece into the green, that's where maximum wealth held is by hodler cohort, and that has been on the rise. Once it breaks through that 65.8% of days that have higher RHODL ratio, it typically indicates we're entering a bull market, and this has happened 3 times in history. You could argue 4 if you go all the way back to 2012, but that doesn't really count. And you know, this means also that Bitcoin is no longer drastically undervalued by historical standards. It's becoming much more of a fair value asset right now as well. And so we'll see. But again, yet another bullish sign. And all of the on-chain stuff, by the way, has been on the money since November. So again, that's the reason we have OCTA. Speaking of more bullish news, Mark Yusko, who was on the channel 2 weeks ago, Mark Yusko says he is officially declaring 3 weeks from Tuesday, April 18th, this coming Tuesday, is the official start of the crypto summer. And that also happens to be Mark Yusko's birthday. Happy birthday, Mark. And that will be, for him, the official start of the crypto summer. Why is he so bullish? Why? Is because he looks at the wave of global liquidity. China printing $1 trillion since October, $1 trillion with a T. And not $1. Japan also another $500 billion, a couple $100 billion. Fed $300 billion back on the balance sheet. So plus or minus 1.5, 1.6 trillion of liquidity is sloshing around in the system. And it turns out people buy things that they like. And there's a whole bunch of people that are liking Bitcoin right now. And per Mark Yusko, he believes Bitcoin and Ethereum are the big heavyweights that are going to absorb a good piece of this liquidity as well. So that's great news. Let's talk about China. We did mention China there for a second. This is the comparative performance of EV makers in China so far this year. And remember, Tesla was never number 1 in China until the price wars happened. Now, China is expected to have about 155 new pure EV and plug-in hybrid models this year, leading to fierce competition in the market. The most ruthless EV competition anywhere on earth. And who is growing faster than anybody else and gaining market share faster than anybody else? Well, it's Tesla. If you asked Charlie Munger, he would have said BYD are the best, but no, that's not what this chart says. You got big players like NIO, XPeng, Li Auto, and BYD, of course. They all have good balance sheets to get through this price war if it continues. But the other car companies that are actually getting destroyed right now is anything with any type of gasoline. People, even plug-in hybrids, they have to pull out of the market altogether in China. So watch this space. Again, you look at countries where there's insane EV adoption, and then you look at other laggard countries because they will follow this model over time. So it's fascinating to see. In addition, what Tesla have done is I used to say they had their foot on the throat of ice makers, but now they're literally just almost ripping it out. Sorry for such a terrible imagery, but if you look at the black line, that's the Model 3 price differential. Under the black line means you are under car parity, and the Model Y now starts at $49,990, or only $42,490 if you get the tax credit of $7,500. That is $5,300 less than the average price paid for a new vehicle in the US during the month of March 2023. Okay? I'll try to repeat that. The Model Y, which is an SUV, was considered a luxury SUV, so the price came down below RAV4, is now $5,300 cheaper than the average car sold in the US. They are absolutely tearing everything apart. So it'll be fun to watch. And this is just the beginning. The rest of 2023 is going to be gangbusters. Now, switching gears, got some bad news and some really horrific news. So I want you to wear your seatbelts. It's going to be a bumpy ride. So first of all, fear and greed is still greedy, but it's falling fast. Okay. And you see the way it's dropped down since I did this a week ago. And it's come down a couple of points, even a big drop just over the last 24 hours. And that is important to know. We're very close to that 1 year high, but it means people are getting a bit nervous. When people get a bit nervous, it takes some money off the table, and that can mean price can fall a little bit. In addition, this is also could be construed as bad news. We call this Fed fodder. US wages now exceed inflation. Big thank you to Sanjay for sharing this with me. But US workers are starting to see pay gains that run faster than inflation. That is the blue line being above the black. And median weekly earnings of full-time wage and salary workers were 6.1% higher in Q1 2023 compared with the same period a year earlier. Inflation during the time ran at only 5.8% per BLS data. BLS is not BS, it's the Bureau of Labor Statistics. So this gives the Fed gunpowder to go another 25 basis points. Although some people begin to think they may not do that because they see all the other damage, or hopefully they will. I know they're looking in the rearview mirror that goes all the way back 6 months, but hopefully they'll wake up and not be too alarmed by this. In addition, after the most amazing Elon Musk BBC interview, I was the first person actually who slated that interviewer on Twitter, and I was so rough. I felt bad about it afterwards. Then within 24 hours, there's about 200 videos doing the same thing. So I didn't feel too bad anymore. But now you've got hit pieces coming from the New York Times, and it's fired up a Stop the Presses movement on social media. It's crazy. And this, New York Times, a lot of people are referring to this as ecological hypocrisy. And this is what happens when America's purported paper of record promulgates an unabashedly biased hit piece against Bitcoin's so-called climate impact, replete with shoddy reporting, wrong data, logical fallacies, and even doctored photographs. So I did say in my 2023 predictions, people would lose all trust in mainstream media. And it's like just the events over the past 7 days, give that. But then you see the politicians jumping on the New York Times piece that hate Bitcoin. They're like, yeah, excellent. But again, when you have such a poorly written piece, it just means you can no longer trust, a newspaper like the New York Times that's been around since, I think, 1856 or 1836, some crazy age like that. Anyway, all trust is gone and never will it come back. So let's talk about the ugly news. This is the piece I want you to have the seatbelt on for a little bit. First of all, we've got big unlocks, dumpages, and you guys like this piece. It's a new segment we've been doing for a month or two now. We actually have a model that tracks all of the unlocks, but some of these are big. I added red arrows beside those that have, close to 1 million plus of unlock a day. So number one is Immutable X, $750,000 worth of unlocks a day. Axie Infinity, that's going to be millions. So we always say they're a money grab, those things, but 175.9 million of Axie is going to dump on the market. Ronin, 55.7 million. Yield Guild Games. You notice the theme here, everybody? Some of these things like the Axies and the Yield Guild Games, these are all kind of money grab metaverse plays. And then Cosmos Hub, Atom is the ticker, 3.1 million per day. These are big, and they do bring the prices down. There's no, that's not negotiable. That's just a fact of life out there. Now, this is the piece for the seatbelt. This is kind of scary. This is from IBD or Business Insider. Sorry, Business Insider wrote this piece, and they talked about the dollar's dominance as a reserve currency eroded last year at 10 times the pace seen in the past 2 decades. Now, that may seem stunning because we have a lot of people saying, oh, you know, dollar's going to be just fine. There's not going to be no de-dollarization, etc. It's still the strongest currency. It still is the world's reserve currency. But the data points in this article were quite interesting. They said now that the US dollar accounts for only 47% of the world's foreign exchange reserves, and it was 55% in 2021 and 67% in 2003. That's 67% in 2003 I used in a video a couple of weeks ago. So that is true. So de-dollarization is in full force. And, you know, even you have people like, I can't remember, Janet Yellen. Yes, she's saying, oh, maybe sanctions are bad. But if it falls another 10 points, 10 percentage points, the US economy will feel a pinch. Inflation, higher costs for imports, etc. Remember, the weaker the dollar, the more expensive stuff gets for Americans. And that will drive inflation faster. Like I always say, you think the Fed controls the inflation? No. Price of oil? No. Strength of the dollar? No. In fact, the more they print, the weaker the dollar becomes. The question is, how is the pace of printing compared to other places? And then you got the talk of the debt ceiling and everything else. It's just crazy. But this is the scary slide I will show today. This is the half-life of the US dollar. It is now 10.47 years. For those of you who aren't familiar with half-lives, out of an initial value, for example, if you have a $100 bill, the remaining value and time decay is possible to calculate the half-life of this bill. And the result is exactly 10.47 years. So the dollar is losing half of its value every 10.47 years. And notice the smooth curve, which pulls out major fluctuations. This money supply can provide much stable benchmark than the price of gold, many people believe, etc. This is why we need hard assets. So if you keep $100 in the bank for 10 years, you'll have 50 bucks left after 10 years. That's why it is not prudent. I always talk about 44%. I've been talking about 44% debasement over 10 years. For 2 years now, I got to up that because it's higher. So my bad. Anyway, it's worse than we expected. So with that, everybody, thank you so much for being here. Thank you to the mods in the chat. I see you all out there. For those of you who are filing your taxes, good luck. I hope the bill is not high. I hope you get a nice refund. And I'll see you all tomorrow. Thank you, everybody. Stephen Weston, yeah. Hey, buddy, I hope you like the Solana news. Good stuff. I did promise you good stuff in April. Remember a couple of weeks ago? That's all happening now. We'll share more as well. Thank you, everybody.